evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for March 7th, 2019. And we're going to discuss sectors, specifically what the sectors are saying about the broader market, and if there's any opportunities just in these ETFs. We always focus on financials and technology. They're right here. But also, utilities is doing something a little surprising right now that should grab our attention. But first, we'll start with the S&P 500. Now, it's into resistance as we know. It's pulling away from resistance as we see. And it's giving our long premium or long put positions some good chance to recover any losses that we've experienced on the way up. And potentially expanding volatility down will keep causing that VIX volatility index over here to go up about 5% today. And of course, any type of downside action from here would result in lower equity prices down toward 2,700 or lower. For this week and beyond, we'll be looking at 2,750 as our short-term pivot as we make any type of adjustments to our open positions, call positions, put positions, verticals, and anything else. And of course, on the intraday frame. The logic continues that this overextended rally could result in a violent snapback, but we're not there yet. Let's jump back to our sector grid and discuss what we can learn from there. We look at the top three sectors, financials, technology, discretionary, as our risk on or offensive names. These things should be doing well in a rising economy and a rising bull market. The middle three are the industrials, materials, and off to itself, energy. The bottom three are considered the risk off or defensive sectors of consumer staples, the opposite of discretionary. Healthcare is our V, which is almost like energy at these points, kind of does its own charting level. And finally, utilities. Now, this is like a bond. So XLU should be seen similarly to TLT or IEF, such that when it's doing well, and we define well as in being at the top right in comparison of the charts, middle would be moderately well, and the bottom right would be weakest. But XLU are things we probably don't trade, but as a collective sector, we look at. Did you know that XLU is making new, or just made really, a 52-week high? Not only is it at new price highs for 2019, most sectors are coming off of new 2019 highs, but XLU, we'll take a look at it just briefly, is at new 52-week highs. And that's something we probably aren't aware of unless we're seeing this very closely. Pulling back to the weekly perspective, we can see just how we got here. So XLU utilities are companies that require a big debt load that often pay high yields or high dividends, relatively speaking, and again, act as protective defensive markets like bonds. This is not something you want to see if you're a big stock market bull right now. If you happen to be a bear, this is what you want to see. Defensive sectors or risk-off avoidant sectors at multi-week, and in this case, 2-year highs, at least a 52-week high. Again, not much to trade off of this, just making observations. Duke Energy is something we might look at if you do want to engage in XLU. Duke could be a tradable stock in a triangle in an uptrend. Also Dominion and just lots of other examples of utility stocks. They just made quite a stellar comeback at the middle part of 2019. But take a look at the earlier part. Right? So just think this thought process backwards. Utilities, or at least Dominion and some others, did a relatively weak start to the new year, 2019, and that was when the equity market was going quite higher. Well, that picture's flipped reversed at this point. Equity market turned a little bit lower, but in this case, Dominion, Duke, XLU, and the like, they're staying strong. So back to our grid and how we look at our sectors currently. Now, we're probably more likely to trade or have open positions in financial and technology stocks. I do. That's where I focus most of my trading on the swing basis. There are also popular stocks in the XLY, which is our consumer discretionary. That includes retail, a big sector, housing, travel, leisure, entertainment, and many, many others. We don't trade a whole lot with industrials. Caterpillar is probably the biggest one we might trade together. XLB is materials, and then E is energy. Not a whole lot of people trade Colgate Palmolive or Kroger or Kellogg's or things like that, but those are part of XLP. Nonetheless, here's what the sectors are saying. Just comparing highs and lows, or top right, middle right, lower right, we have financials at the middle right of the chart. K Technology is a little bit above that, closer to the 2018 highs and closer to the right side of the chart, the upper right side, as is consumer discretionary. That's typically bullish, but you are seeing deep and expected pullbacks down away from daily chart levels. That includes 2650 in the financials. I is a little bit stronger, XLI, and that's taken us just a little bit shy of 2018's high. Materials clearly at the middle, as is energy. There's not really a lot of weakness on this chart, or at least this perspective, but nonetheless, that shows a robust bull market with signs of caution, signs of weakness, and signs of potential larger pullback yet to come. And of course, that will play into our thought process on the bigger picture, which includes the daily chart. Again, if these levels fail and we start to push back lower, that's going to transact or play into sectors and individual stocks, including popular technology names, financial names, and many other retail. The other way to look at this is the Nasdaq. Again, pulling back from 7,200, key resistance point, seeing a pullback there on high bear volume. That is indicative that odds do favor even lower prices, but of course, we'll be watching for any surprises. Dow Jones futures pulling away from 26,000. The Russell had a deep pull, retrace movement lower, sell side activity from 1,600. And again, on high volume. All of this is expected. All of this, you might say, is overdue. So it's easier to play these on a option basis or a swing trade basis because we're not so much worried about the intraday activity. And as we see today, a lot of the downside activity happened within the first 30 minutes. As a day trader, it's difficult to take part in that, especially when the market opens so weak, so rapidly. So that's a testament to putting on positions on the bigger perspective, letting the market work for you. And again, that's been with a focus on purchased premium, purchased volatility, longer duration plays with puts, or not that we recommend too much because the volatility is so low, calls sold above the market. All of those done with hedging and with verticals or in-out spreads to the downside. We'll keep watching all these developments as we push into the next week, but don't forget tomorrow could give us a surprise in the monthly jobs report. So watch that closely 1 hour before the market opens, and we'll of course watch our risk and open positions. This is Corey Rosenblum with your Theo Nightly video for March 7th, 2019.